Hello and welcome to FreightWaves Weekly Market Update. My name is Zach Strickland. I will be taking you guys through a couple of indices, also kind of explaining a few things about how you can use the sonar tool to help you see market trends, as well as pointing out a few market insights that we think might be interesting for our audience to know. So I'll start off here with the outbound tender rejection index for the nation. For those of you that have been paying attention to FreightWaves.com or have been in Sonar for a period of time, you'll know that this is a measure that tells us just how many loads are being accepted or conversely rejected by carriers as they become available from shippers. It is a good indication of capacity in the market because if carriers are rejecting loads, that means they probably don't have the capacity or they're going to go and play on the spot market. If you see this chart here, I also have a pretty couple of colored lines and a white line moving through the middle. What that is called is a Bollinger Band. Now, a Bollinger Band is going to help you see exactly what's important in these charts. It's basically a measure of volatility and momentum. So that white line in the middle is a moving average. Right now I have it set to a 14-day moving average. That's probably good enough because it's going to react a lot more quickly in a freight market. And what we're wanting to do is get in front of patterns and not see long-term trends. We want to see the short term. To the top side of that white line, you're going to see a green line. And then on the bottom side, you're going to see a red line. These are standard deviations. So it's 1.5 standard deviations lower on the red side and 1.5 higher on the top side. So whenever this blue line moves through either one of these standard deviations, it means you may want to be paying attention to the market. When it's moving down, as you see here, has happened around mid-April, it means that the market is moving towards stability. So you're probably not going to see a lot of activity on the spot market. And when it moves up, as we're seeing right now, and it's poking its head out of the green line, it means the spot market is probably a place that people are starting to play a lot more in. That means higher rates in general, but that is what's happening in the country right now. So right now it looks like it had a heated moment right before the end of May, as we normally see end of month have big surges in freight, and it cooled off right there in the 1st of June, probably around because of Memorial Day. And then it's starting to heat back up again as we get into June. So June and July and August, typically pretty busy freight months. So let's go on and see some more targeted markets. Let's look at the Los Angeles market, for instance. So the last month, we saw Los Angeles really take a huge turn as it heated up after being pretty quiet for the majority of the spring. People obviously waiting on produce season to kick off. It kind of came in a little slow, and now we're seeing this huge push in May. And what we think happened here was the Chinese New Year slowed down production in the spring and then turned back on. And about 4 to 6 weeks later, we have this huge push of container freight. Now, why do we think that there is a big push of container freight? Well, we have this thing called the Freightos Baltic Exchange, and I'm going to type in the code for China to the North American West Coast. Now, the Bollinger Band is not necessarily a good measure to look at here, so I'm going to remove that, and I'm just going to show you to focus on these points. So at the end of March, the market bottomed out at $812 for a 40-foot container, moving from the China coast to the North American West Coast. So ports like Los Angeles and Seattle, you're paying around $812 for a 40-foot container or two 20-foot equivalents. And then now you're seeing this huge push starting in late April, early May, as container prices went up rapidly to almost $1,400. So this big surge basically means that there's going to be a lot more freight coming in off of the coast of China, meaning that they're going to be crowded with port congestion and freight coming into it. So therefore the trucks are just not going to be available to pull it out. And you see that kind of lead this outbound tender rejection index. Now I'm going to put my Bollinger Band right back on here so you can see that it poked right through the top green line. That's probably meaning that spot market activity did have a chance to get involved in LA for a time period, but it has since cooled down, and now it looks like it's moving towards stability at the moment, which means maybe the market is not going to stay high. Now, in the next section, I'm going to show you Dallas. Now, this is something we recently just started looking at. As LA, the next natural step is the Dallas market in the middle of the country. You see now that Dallas has started to heat up. We think that a lot of the freight that's come through the Los Angeles region on containers is now hitting the middle of the country, sucking away capacity. The produce season obviously has started kicking off as well, keeping reefer trailers towards the coast and where the vegetables are. And now the Dallas market is getting involved. Now this trend appears to be on a continuation as it's poked through the green line, and it has kind of recovered slightly, but right now it looks like it might still be on a trend to stay heated. That is what we're seeing right now. So I guess time will tell. All right, guys, that's about all the time we have. Thank you for listening, and stay tuned to FreightWaves for more market updates. Thank you.